Bore da a chroeso, good morning and welcome to this webinar about the UK Export Finance General Export Facility. We're pleased that Will Gray is on the call and will be doing the presentation today on behalf of the UK Export Finance. Can I ask you all to switch your cameras and microphones off, please? So we can see the presentation on the full screen. There is a questions and answer that can be accessed through the chat bar. So please ask any questions in the chat bar as we go along, and there'll be an opportunity at the end as well to ask questions. So it's over to you, Will.
Great, thanks for that introduction, Alan, and good morning, everybody. My name is William Gray from UK Export Finance. I'm the head of our underwriting team for our short-term trade finance products, which essentially guarantees and also some insurance products. So if we kick off the presentation, I'll then go into our products in more detail, but specifically talk about the new General Export Facility. If you could hit the next slide, please. Great. So UKEF's mission, put simply, is to ensure that no viable export fails for lack of finance or insurance while operating at no net cost to the taxpayer. What this means is, and there's always some nuance around the term viable export, is that an export that we deem to fit our risk criteria from several perspectives in terms of underwriting, credit, ENS, compliance, should then not fail for lack of finance availability and insurance, and should be priced accordingly so that in the aggregate, our whole book of business makes a return to the taxpayer rather than a net loss. If we could please proceed to the next slide. So UKEF's products, and there are several, but today I'll speak specifically about our trade finance short-term products. They're available for almost all sectors, goods and services, and that includes intangibles such as, IP and software. And what I mean by all sectors is that we do have some restrictions around certain controlled sectors, such as, chemical, biological, nuclear, depending, and then others like tobacco and pornography, and sometimes sharp arms. But depending on the context of any particular transaction, we'll take a view as to whether it fits within our risk appetite. The other key area that our trade finance products are geared up to support are specifically SMEs, but we can also support larger corporates, as I'll explain later in the presentation. And to date, we've supported exports to over 200 countries in over 60 currencies. And later in the presentation, I'll give you some updated statistics that have come out of our latest annual report, as well as on the take-up rate of the new General Export Facility. Next slide. So what are our products? Well, in terms of our overall product suite, we have financing, which is almost like, direct financing in some cases. We also have guarantees of financial institutions and insurance products. In the first column, where we talk about winning contracts, our buyer credit facility, direct lending facility, and supplier credit financing facilities are all schemes that are largely geared towards medium to longer term deals that sometimes take many months to construct, where essentially UKEF would either lend directly or guarantee lending to the end buyer, in many cases a sovereign entity, so that they can purchase goods from the UK supply chain. Now, speaking more specifically about our short-term products, we come on to our guarantees. And these are short-term guarantees of bonds, working capital loans, and now, as I'll explain, the General Export Facility, where through these guarantees, we provide an 80% guarantee to financial institutions. Therefore, in the event that that financial institution, let's say, puts out a loan that isn't repaid by an exporter or has a bond out for an exporter that is called, they can recover 80% from us. So it's a way to incentivize lending and bond or guarantee issuance for those exports. And lastly, we have insurance that many of you will be familiar with, such as our export insurance policy, which is essentially a combined trade credit and political risk policy that can cover up to 95% of a contract, and also our bond insurance policy, which provides cover where there is an unfair calling of a bond. Key to note, unfair calling. And for both of those products, the exporter would have to demonstrate that it was unable to obtain insurance from the commercial market before approaching us. Next slide, please. So in terms of, oh, sorry, if you could go one back. There we go, thanks. So in terms of our focus for today, I'm going to be talking about the General Export Facility. This is a new product that has been a couple of years in the making that was announced by Minister Stewart in December 2020 and was then operationalized by us and the banks around February 2021 this year. What's so revolutionary about this product compared to our other guarantee products is that our previous guarantee products, the Export Working Capital Scheme and Bond Support Scheme, could only be used to issue guarantees that were connected to a specific export contract, which sometimes was hard to evidence, especially for SMEs that might only have sometimes purchase orders or informal small arrangements. What the General Export Facility allows is that it allows us to guarantee up to 80% of loans and bonds issued by a bank in relation to a qualifying exporter that are not necessarily linked to an export contract. That means that we can support all kinds of facilities, including simply domestic business, so long as the obligor, yourselves, the exporter, qualify under the scheme. So we can offer an 80% guarantee of loans and bonds over a maximum period of 5 years. And typically, this is designed for smaller companies or mid-sized corporates. So we support facility values up to about £25 million. Currently, it can be accessed directly through the main 5 high street banks, Barclays, NatWest, Lloyds, HSBC, and Santander, although we are constantly trying to onboard new financial institutions and non-bank financial institutions onto the scheme. Next slide. So what are the eligibility criteria for the General Export Facility? Well, we tried to keep it relatively simple. So in this case, there really is, unlike our previous schemes, a UK content criteria. Under our previous schemes, in order to qualify, a certain export contract had to have at least 20% UK content. Since the General Export Facility is not specific to to export contracts, we've defined an eligible exporter slightly differently. In order to become an eligible exporter under GEF, there are 2 main criteria. One, you must have export sales of 20% of annual turnover in one of the last 3 years, based on your latest accounts, or 5% annual turnover in each of the last 3 years. So hopefully we've designed that in a way that hopefully it's a bar that many exporters or maybe just new exporters might be likely to meet. Also key, as with our other schemes, is that the bank's obligor, the exporter, must have premises in the UK, employ personnel in the UK, and pay UK taxes. And really what we're trying to avoid here is just, a brass-plated post office, essentially, or back office facility or special purpose vehicle that's being used to access UK export finance. And if ever you have any doubt about how to qualify from the scheme or just have some questions, feel free to reach out to one of our export finance managers. And I'll have there a link at the end of this presentation to where you can find them. There are also a number on the call at the moment if you have questions for them later. Next slide, please. So now I'll go on to the key themes of the General Export Facility, and the first one is really accessibility. Key behind this is that we wanted to create a scheme that would improve accessibility for exporters. We had previously built out our classic guarantee schemes, the Export Working Capital Scheme and Bond Support Scheme, to also support Tier 1 suppliers into overall supply chains. And there was some good take-up rate there, but it wasn't enough. We really wanted to create a product that would be easily accessible, not tied to specific export contracts, and therefore, give banks the confidence to lend while meeting the business needs of SMEs and growing companies. By means of improving accessibility, one of the things that we've rolled out over the years that also applies to GEF is that we've given participating banks delegated authority to put risks to UKEF up to a UKEF risk quantum of £5 million, where the General Export Facility does not exceed a 2-year period. Of course, banks will also have the ability to renew the GEF facility prior to the expiry of that 2-year period, and therefore enable it to continue into the future. Also, the fact that it's not tied to specific export contracts means that so long as you, the exporter, qualify under the scheme, the underlying facilities can be used, to any extent to support, export contracts or simply domestic business. It's available, as I mentioned at the top of the hour, to almost any company in any sector, except for certain control sectors, as I mentioned, which now include coal, oil and gas, and fossil fuel related activities, following the UK government's implementation of a policy on the 31st of March this year, which is aiming to phase out support for overseas fossil fuel related activities. And I can speak about that in more detail in the Q&A if you have any questions. To that end, and in order to make GEF accessible, we've tried to keep the eligibility rules simple. And in fact, they are more simple than our classic schemes. And the main, I would say, key theme of GEF is that by allowing a bank to obtain a General Export Facility guarantee for up to 5 years, it allows companies such as yourselves to plan for the future. You can now think ahead, knowing that financing will be in place to meet your future orders. Next slide, please. The second theme is flexibility. And as mentioned, the key theme around flexibility is that it can be used for both export and domestic business. It can also support a wide variety of financial instruments, such as bonds, import letters of credit, trade loans, and many others. Although do speak with your bank RM when consulting them about what financial instruments are available under a GEF, because each bank will have its own risk appetite in terms of which financial instruments it will support under the General Export Facility. Finally, in terms of being flexible, we do have a general risk appetite for a GEF of up to £25 million. But if a request comes into us for a limit that is higher, we will consider it. Although in many cases we may require Treasury's consent in order to provide a General Export Facility that is of a value higher than £25 million. Next slide, please. And the last theme is certainty. So really, as I mentioned, key here is that your bank can assist you in getting a General Export Facility guarantee in place for a period of 2 to 5 years. And that can really assist, especially SMEs, in forward planning, in planning ahead to win business, or just planning financing and bonding to meet its committed order book. One of the main differences, and in fact probably one of the most celebrated, is the fact that on our classic schemes, if ever there was an agent or intermediary involved in a transaction, because our classic schemes looked specifically at export contracts and were tied to them, we were always required to do a very deep level of due diligence on any agents or intermediaries. And that would often add 2 to 3 weeks to any request that came into UKEF, which is obviously onerous when a small business is trying to plan ahead in order to win new business. It needs to be able to react quickly. With a general export facility, because it's no longer tied to specific contracts, UKEF is not required to analyze agents or intermediaries. So it allows us to provide you guys with a quicker turnaround time. And also, our guarantee remains available for the whole period for which it's been approved. So, if it's approved today for 5 years, our guarantee will remain valid for that time. There isn't an annual renewal process unless your bank wishes to renew the GEF in order to extend its validity period further into the future. Next slide, please. So really, what does UK Export Finance do for SMEs, and how has GEF helped that mission? And so recently, and I believe it might only have been a week or two ago, UK Export Finance published its latest audited accounts for the last financial year, ending 31st of March 2021. And in fact, the number of SMEs that we've supported has increased. 79% of companies directly supported by UKEF were SMEs, of which 62% were based outside of the south of England, which is pretty good. 52% were in the manufacturing sector, which, if memory serves, is actually a decrease from previous years, as we see our services being used by more diverse industries. To date, 2021, we've supported, and in fact, as of yesterday, we've supported 28 GEF facilities, the vast majority of which have been for SMEs. I would say 99%, which is a really good sign of its take-up rate by smaller companies. In addition, of the 28 GEFs that we have underwritten and approved to date, if memory serves, something like 66% of exporters are new exporters to UK Export Finance, which shows that it is being effective in reaching new customers out there and helping new exports. And as mentioned, we've already supported GEFs across a wide range of industries, from entertainment and software services to e-commerce, renewable energy, wholesale retail, leasing services, construction equipment, agricultural products, and many more. And as I was mentioning to my Welsh colleagues ahead of this call, we have already supported Welsh businesses under the GEF, which is very positive. In fact, to date, we've supported GEFs already in every country within the union. So it's just shown a great take-up rate to date. And we continue to wrestle with a pretty large pipeline of deals, including some sizable GEFs that are already pushing the boundaries in terms of the size of facility that we can entertain. So it's been very positive. And as mentioned, we continue to work on onboarding new banks and non-bank financial institutions onto the scheme so that we can increase the availability of GEF to more exporters out there. Next slide, please. So key for you guys to know is how to access GEF. Well, the first port of call should be speaking to your local export finance manager, and we'll include a link at the end of this presentation where you can identify the EFM for your region. You should also speak to your local representative at your participating bank. They may well not be the first or the correct ECA, Export Credit Agency facing individual within your bank, but they can then refer you to the correct people if you mention that you're interested in obtaining a UKEF guarantee. You should also be upfront and clear about your financing needs, because in order for UKEF to be able to guarantee your risk, the bank still needs to retain 20% of the total facility value. So the bank still has to have some credit appetite to entertain your needs. Importantly, as of the 31st of March, it has become more difficult for us to support companies that are engaged in fossil fuel related activities, such especially coal is almost impossible, and our appetite for oil and gas related activities is very limited. However, for SMEs, there is a 1-year exemption in place with respect to SMEs' need to comply with the new UK government policy. So long as a general export facility is approved for an SME prior to 31st of March 2022, we can continue to provide that guarantee throughout the full facility period, even once the rules change, once the SME exemption ends. As mentioned, your bank must be prepared to retain 20% of the risk. You should consider when approaching your bank that they may be able to fast track your request if the total facility value in terms of UKEF's 80% would be less than £5 million and the tenor of the facility sought is 24 months or less. So keep that in mind when approaching your bank. It may make it easier for them to turn around a positive credit decision. Next slide, please. So that is it. So thank you guys for listening, and Alan and I will welcome any questions that you might have.
Thanks, Will. I found that very informative. What's great is that it seems that UK Export Finance is providing more flexible facilities to SMEs and also make it easier to access the support as well and plan ahead. We tend to forget that UK Export Finance has been in existence for over 100 years. So it's not a new facility really, but I think as an organisation you are moving with the times to help SMEs in these very difficult times. I first came across UK Export Finance over 30 years ago, and it's called ECGD department.
That's right. That's still a legal name.
Yeah. So so things are coming full circle in my career, I think.
Very good, very good. No, thank you. And let's take a look at what questions we have in the chat. I see one from George Irvine. Can we use our overseas bank with respect to retain the 20% risk? George, if I've understood correctly, you're asking whether an overseas bank can participate on the GEF scheme. So I hope I'm interpreting that correctly. Currently, the GEF is only supported by the main 5 high street banking groups. We are working with overseas banks to onboard them onto GEF. We're actually looking at some at the moment that I can't disclose. But if you look at our classic schemes, the Export Working Capital Scheme and Bond Support Scheme, you'll see that for those previous schemes, we have already onboarded quite a long list of overseas banks. So you can get an idea of the kind of institutions that we're working with to expand the availability of GEF. And let's see what other questions we have here. Matthew Taylor, recent government policy changes in respect of the gas and fossil fuel sector appear to have a 1-year exemption for SMEs, correct? If a GEF is approved under this 1-year exemption for a tenor strength beyond 30 March, would it still remain valid? Yeah, good question, Matt. And that was very much what I was trying to refer to at the end of the presentation. So that understanding is correct. So long as UKEF has approved a GEF application by your bank and the bank has taken up that facility, so they've agreed to then issue it prior to the 31st of March 2022, that GEF would remain valid for the whole period for which it was approved. So if it was approved on the 1st of March 2022 for 5 years, it will remain valid for that 5-year period. So you can still get your foot in the door prior to the regulations changing. And we'll work actively with you in order to make sure that you have that ongoing flexibility to access the financing you need. Although do note that it is not our intention at any point to kind of sidestep or find loopholes in the UK government policy. We will still carry out a risk evaluation to make sure that we are comfortable with your risk from an environmental perspective. We have another question here, Paul Hughes. UKEF will support bank bonds, but what about insurance-backed surety bonds that have become increasingly difficult to obtain? Yeah, that's a good question, and I myself come from a reinsurance background where I've dealt in surety, and at the moment I'd say our main requests are for guarantees of advance payment bonds and performance bonds. And certainly we've noticed that historically sureties have had probably more credit risk appetite than banks, but that is starting to dry up. And I think we can support the same APGs or PBs that sureties provide, but currently we do not have any sureties onboarded onto our general export finance scheme. So you still have to access it via the main 5 high street banks. Another question in here from Rachel. Some of our export customers voted oil and gas. Does this rule out our eligibility for GEF? Okay, got it. Rachel, the short answer is no. So you may still be eligible for GEF. You've asked, you've kind of asked for the time, but I'm going to build you a clock. So I'll try not to go into too much detail, but you can look up the general guidance that was published by the UK government on the 31st of March, which talks about the different ways in which government institutions must examine compliance with the UK government overseas fossil fuel policy. And it varies depending on whether that support is specific to a certain contract or is in relation to financing or guarantees of fungible benefits where they cannot be tied to specific contracts. And that would be the case with GEF. And in those cases, such as with GEF, we have to apply a test, which is called the revenue threshold test. And it varies. And the revenue threshold test looks at the amount of, or the percentage of turnover in the present year and future years for an exporter that would be derived from overseas fossil fuel activities. So it doesn't count domestic fossil fuel activities against you. So if you're drilling in the North Sea, that's okay under the policy. But under the revenue threshold test, if you have 25% or more revenue in the current financial year that is derived from overseas fossil fuel activities, you would not be eligible under GEF. If it is 25% or less, you would be subject to certain other criteria. However, as we progress throughout the years, and you can see this within the guidance, the percentage of overseas fossil fuel activities allowed decreases year on year. So the policy will become more difficult to comply with over the years as the UK government expects businesses to adapt to the new market and gear themselves more and more towards other sectors such as renewables. So I hope that answered your question, Rachel. But if you do have any further concerns around that, feel free to reach out to your EFM or even myself directly. Do we have, just checking on the time, Dominique, how are we doing?
We're fine on time.
Great. Thanks, Alan. So it means there's no getting away from me. I just have to keep doing this. Is another question here regarding control sectors. Ben Simmons, if an export license is required and granted, can a GEF still be used? Yeah, Ben, the answer is totally. So for certain control sectors such as sharp arms or defense, We will always want to see that there is an export license in place. And for certain dual-use goods, we'll also want to see that there is an end-user undertaking in place, stating that the goods are being used for civilian purposes rather than military. So if you've got an export license, there's a good chance that, subject to meeting our other criteria, such as credit risk, we will be able to support you under a GEF. Good question. George Irvine is back, and you're asking, we are currently engaged with the government of Guyana to provide them with a new technology to reduce and eradicate landfills. Very good. This request has now been discussed with DIT Local Guyana and also DIT Regional Columbia. Initial meetings held with UCAF are now in the process of identifying local UK subcontractors to provide the services. What would you say? Is or would be real time for a roadmap to cover the due diligence as per your guidelines? Yeah, good question. Good question, George, and it's one that we often face. And I expect that you're referring to the due diligence guidelines as pertain to the fossil fuels policy. Put something in the chat if I misinterpreted your question. But in terms of the compliance with the UK government fossil fuel policy, at the moment, it was just implemented in March. So there aren't. Okay, this is not this is non-fossil fuels. Okay, so you're talking about the assessment in terms of our overall assessment. And George, how long is a piece of string? Our due diligence will very much depend on a few items. The first of which is what is the quantum of the GEF facility that you're seeking? Is it greater or lesser than £5 million? Is the tenor of the facility 2 years, more or less? And then the specifics of your business itself and your credit risk profile. Typically, though, just to give you some kind of something to think about, our general internal SLAs for turning around a GEF range at about 3 weeks, and we're trying to get faster. Sometimes they take more, sometimes they take less, but I would plan for about maybe 3 to 4 weeks in approaching us, especially if you think your request will be difficult. Great. And I think we may have covered most of the questions there. Alan, over to you.
During the presentation and the question and answer session, Will has mentioned the export finance managers, who are the first point of contact. In Wales at the moment, UK Export Finance are in the process of appointing a new export finance manager, who will hopefully take up his role at the end of the month. That gentleman is Stephen Wilson, who's based in South Wales. So if you've got any inquiries to UK Export Finance, then please feel free to pass them either through myself or your international trade advisor, and we will put you in touch with the appropriate person in UK Export Finance as a bridging gap until Stephen takes up his post.
Great, good stuff. No, thank you very much, Alan, and thank you to the Welsh Government for inviting UK Export Finance to speak about GEF, where we've been really excited about this product launch. It's been a long time in the works, and the take-up rate so far has exceeded our expectations. And I know, having visited a number of you down in Wales previously for different UKEF schemes, that there is more demand out there in Wales, and we look forward to speaking with you and meeting your demands for more flexible financing. So please pick up the phone, speak to your FM, speak to your bank, speak to me, and we'll be happy to talk to you about your opportunities.
George, you've just put a comment in the box. Would love to have his email address. Is that Stephen's when he's in post? If so, we can arrange to have his contact details circulated to the attendees once he's in post. A copy of this recording will also go onto the Busnes Wales website in case you need to refer to it in the future. It has been recorded.
Great. Great. Well, I think with that, we close out. Thank you very much, everybody. Thanks for your patience, and thank you, Alan, and the Welsh Government.
Can I just say again, once more, thank you very much to Will for the very interesting presentation. It's a fantastic new facility for Welsh businesses, especially SMEs. Diolch yn fawr iawn. Thank you very much.
Goodbye, everyone.
Bye.
Thank you.